Hey everyone, welcome to my Millennial Answer bonus summer series. John, we're jumping on to, you might be having some downtime this holiday season. You might want to get some encouragement. So we're just going to answer a couple of questions every few days and see if we can do that. Now, a few of you, well, it's funny, John, have you ever Googled your own name?
My son has.
Yeah. Any surprises?
No. A photo came up from yesteryear of me in football gear with tape wrapped around my head.
Right.
So, but you?
Yeah, I do sometimes just because I like to scan. I've got the Google Media search thing, so if my name gets mentioned in news articles and whatever, it alerts me. But I still like to do it just, every couple of weeks just as a spot check.
Yeah.
And Google said, what other people have searched for, and it said Glen James net worth, Glen James LinkedIn, Glen James podcast, Glen James age.
Age? Wow.
I know. So this young 30-year-old kid, yeah. So, and I was thinking, I don't think I'll ever publicly tell people what I'm worth because, other online influencers and money people do that. That's not my vibe because it's none of anyone's business. But
what does it mean anyway?
It doesn't mean anything. You could be the biggest arsehole in the world and have all the money in the world. Who cares?
And not happy.
So I don't think it actually matters what I'm worth or what John's worth. But I just thought it was funny. So what I did, I put together Glen's personal financial plan. Right. So if you actually want to know how I invest all my money, like where I invest it, what structures, property, shares.
So what you've done prior or what you're doing now?
What I'm doing right now.
Sure.
My estate plan's listed, everything's there.
Nice.
And it's a downloadable ebook basically. I think it's about 15 pages where I just go through everything in my own personal life.
Awesome.
And it is a way for people to, one, if they're nosy, they can actually have a look how I've set up my financial house, because we talk about having a sound financial house. So having your spending plan, your estate plan, your protection plan, you're debt free, you've got a cash flow system, all that stuff.
Yeah.
And I just detail it all.
Yeah, awesome.
So it's a way that people can log in. There'll be a link in the show note to our shop and you can buy that, and I just bear everything.
Yeah, full disclosure.
Love
it.
Yeah. So there you go. Now, Caro Park asks, what's the best way to choose a bank? What metrics are important? So what are you thinking on this question, John?
Well, I suppose the common question is mortgage broker or bank, isn't it? So here she's saying, well, I'm prepared to do the legwork. I'm not going to use a mortgage broker. I'm going to choose a bank. Interesting
that you've just assumed that it's about lending, where I'm thinking I had the personal banking vibe, not even worrying about a mortgage, but we can cover both. So,
okay, so you're thinking personal loan? Are you thinking?
Well, no, I'm literally thinking transactional accounts, online savings accounts, all that. But it's funny because the bank covers all those things. It is the lending.
Yeah.
It is the personal stuff. So I'll just keep you going, but I just wanted to plant that seed while you answer.
Yeah. Okay. So while you've planted it, if it's there for everyday transacting, couldn't care less. I don't think there's much difference between them all. The colour of the brand and the features and the apps, 6 to 1, half a dozen another for me. If it is going to lend, then you've got to be a bit more strategic in what it is that you're going to want to lend. Am I $500,000 house, $30,000 car, boat, whatever. So in my space, it's always, or not always, but mostly about lending to buy a house.
Right. So okay, so let's unpack this. John Pigeon, like you go to a mortgage broker.
Yes.
They help identify a lender that is most suited to you.
Shortlist, yep.
So on that, you really don't care. As long as you get a good deal and the shoe fits, you get what you want it to get.
No emotion whatsoever.
Yep. And then on the personal, you bought Nath a long black over and yourself a whatever you're drinking, chai latte, whatever you have, that everyday personal transaction, you also don't give a crap.
No.
Okay, interesting.
Because what difference does it make, right? Now, if it's an interest saver account, what do we... an interest-bearing account, how much are we going to make if we're 0.1% difference?
And it's interesting because you've just gone, banking's hygiene, don't care. I'm high level strategy. I just want these goals. You know, if that bank's paying 1.5% interest and that bank's paying 1.4% interest, I'm just not moving heaven and earth to save 0.1.
No. And I'm not that blasé with it when it comes to loaning $600,000 for a house. I'll know that my good mortgage broker will have shortlisted the best 3 or 4 for me, and then I can choose.
Yeah.
But I trust that process.
Yeah.
Another level again of saying, well, I've got my principal place of residence. I get 3 valuations. The highest valuer wins my business.
Totally.
Simple as that. So there's got to be very little emotion, but that's just me.
Yeah. So I kind of, when I read the question, I actually read it. So the question is, what's the best way to choose a bank? What metrics are important? I'm answering this, what's the best way to choose anything?
Yes.
So what's the best way to choose a car mechanic? Nath and I, Nath he drove me to the mechanic this morning, or the tyre place, because I took the Prado out on the weekend and trashed it and the steering's out. So I had to pay $75 for a wheel alignment after I go out every freaking time. And we were talking about mechanics, and Sarah, his girlfriend, needs to service a car, and I'm probably divulging their workings of a relationship here publicly, but
shout out to Sarah.
We kind of like just resolved, like even with the car mechanic, we'll just ask for recommendations. Ask other people, what do you use and why?
Yeah.
So what's the best way to choose anything? When I need a mortgage broker, what do I do? Well, I don't know. Well, I go to the sortyourmoneyout.com, click get help, and Glenn James will refer you to someone that he can trust, whether it's John's broker or someone else in our network. Yeah. So I think it's just, number one, getting some trusted recommendations on why you would use that product or service.
Yeah.
You could go a bit deeper into customer service. I'm all about the customer service side of it. Like if it's a bank from a million years ago and they've got one branch out in the sticks and they're trying to get online and do all that, which is awesome, but I still have to go into the branch, dance 3 times backwards and, do a TikTok pointing video and bloody take unicorn tears from the Alps of Narnia. I don't want to deal with that bank because I want you to make my life easy.
Yes.
I use Upbank for my day-to-day blow account. It's really easy. Open the app, get an account. If you haven't got an Upbank account, I'll put a link in the show notes. You can sign up.
Yeah.
We might see if we can get $5 for the listener signing up.
I'll
organise that right after this episode. But I think it's like what metrics are important. So for me, the metrics are, is the app easy to use? Is the internet banking easy to use? Because like you said, John, that 1.4% interest versus 1.45% or 1.5, that's not an important metric for me. I think you need to work out what's important to you. Ask people.
Yeah.
Just think, how would I find a new hairdresser? How would I find a new car mechanic? How would I find a new XYZ? And really work out what's important to you.
Yeah.
Because the banking part should be hygiene.
Yeah, totally.
But don't make me go into a branch to open an account.
No.
Make the app easy. So on my phone, and what we could do...
We probably won't see branches in 5 years' time.
No, that's right. Let's try and do something on the fly. If you're watching on YouTube, I'm going to share this to the studio. So if Nath goes over to the iPad, you can see there in the top left, this is my home screen of the app. Upbank's got a little widget and it tells me how much is in my blow account. I spent $13 at $8.56 this morning at Two Birds Cafe, and I've got $285 left for the week. So it's just...
Gee, it's only Monday.
So it's just, those are the soft things. I'm not going to the bank for hygiene because everyone needs to be there. And then, you might look and go, well, that bank lends to fossil fuel industry. I'm not going with them. Hey, sure, you can choose whatever's important to you. That I don't care as much about the next person with, my bank, because, little Glenn over here with his $2,000, it's not moving the needle.
No.
But if that's important to you, absolutely don't bank with that bank.
Yeah, so would you put that gut feel in there as well as, like you mentioned the hairdresser before. Sometimes you've got to give something a go to have an experience, to be able to put a line in the sand and say, no, I want more out of this product.
Yeah. And how often have you had a gut feeling and gone against it?
Yeah.
And then it turns out, I shouldn't have done that.
Yeah, absolutely. And I've done that with like property. I've actually had a gut feel this is going to be okay, and it actually didn't turn out the way I wanted.
Okay.
So,
I say what you're saying is your gut feelings are random, so ignore it.
well, I think it's just one indicator, isn't it? Like you've mentioned ease of access, you've mentioned word of mouth, like gut feels thrown in there, but it's just not if you just go on gut feel alone for the rest of your life.
Yeah. And I think it's what do you want out of the bank? Like if it, in talking about what metrics are important, it's not only, what's important to you, be the customer service, the app, the online experience, what product's important. If I'm going for a mortgage, do I just want a vanilla mortgage? I want to pay my mortgage weekly and get on with my life.
Yeah.
Or do I want 15 offset accounts in a package?
Yeah, that's right.
So these are the metrics that you've got to work out. What's important to you. Now, there's a question here from Tia Kitchener. Is it possible to build the cost of renovations or part renovations into your mortgage? Sounds like one for the property guy.
Yeah.
And if you are new to my
mortgage broker.
Yeah, or a mortgage broker. Yeah, if you are a mortgage broker and you're in my lounge room, can you come into the studio? Yeah. Or if you are new to this podcast, John runs a podcast with Emily Wallace called My Millennial Property. And I thought I'd get John, the property guy, to have a swing at this one.
So I think, first of all, I'm presuming to you that we've bought a house. We own that house. Now we're deciding that, I want to do some renovations. So there's two ways that we can pay for those renovations. One is through your cold hard cash in your pocket or in the bank. The second is through what we call equity. So the value in the house minus the debt, the banks will lend you a certain amount up to that debt and then say, yep, you can use that money for whatever you want. And sometimes they'll ask you what you want to use it for, and then you would say, well, I'm going to do some renovations or whatever the case may be. So the answer to her question is yes, but it depends on your value to debt ratio.
So an example could be, you've got a house worth $500,000. You've got $100,000 worth of equity in the property. So that means you've got $400,000 worth of debt. So that means that $500,000 property has a loan to value ratio of 80%. So there's a $400,000 value, well, $500,000 value, $100,000 equity. Yep. The loan to value ratio is 80%.
Correct.
Does that make sense?
Yep.
The minute we go to the bank and say we want to borrow 50 grand for a renovation, that blows you out of the magical 80% LVR, which means you may have to pay $12,000 lender's mortgage insurance just to do the renovation if you wanted to borrow it. Is that correct?
Yeah. So in that example, you've got $400K worth of debt. Your house is worth $500.
Yep.
You've conceptually got $100,000 of equity, but that's not usable equity. There's only some of that's usable.
That's what I want to get to. So it's the question to you is, yes, absolutely you can, but you need to go to your mortgage broker to see which way you can cut this. Now, if, for example, you had a $50,000 inheritance that was cash, like you mentioned before, it might be easier just to cash flow the property, renovate it, get a bank vow, and just have a look at what the LVR sits at once it's been renovated.
Yeah, and I think there's a really common trend with homeowners, and it's been happening for the last 100 years, where they want to upgrade their home. They may want to do renovations to it, or they just want to go and buy something that's a better product. Very common for them to pull equity out of that home to then do that renovation without using cash because they haven't been able to save or for whatever reason. What that's doing is it's non-deductible debt for a start, but it's actually increasing their bad debt to a point where if they want to go and invest further down the track, their servicing will be impacted. Now, if you don't understand servicing, there's plenty of episodes on all of that, but what I'm trying to say is you're much better off using cash in that example because it's non-deductible debt.
Yes. And I guess another example, if that property was worth $550,000 up from the 500 and you still owed 400 on it, that means you could theoretically borrow $50,000 and still be at that 80-20 LVR.
Yes. Yeah.
So absolutely possible. Speak to your mortgage broker. It might be you have to, if the mortgage is tight with your lending and you're in mortgage insurance territory anyway, it might be that you have to cash flow the renovation. And by cash flow, we mean, as John said, pay for it with your own cash, or go, look, we've got $5,000 here. Let's do stage one and do this, and then this and this.
Yeah.
I'm personally not a fan of going to get the personal loan, doing the renovation, getting the bank to reval the property, and then clearing the personal loan and refining it.
Yeah.
That can be fraught with danger because you might not get the bank val.
No.
Like, it's all well and good. You've had the real estate agent over, goes, oh yeah, renovate the bathroom, the kitchen. Yeah, get a $50,000 personal loan. Then the mortgage rate goes, yeah, once we get the reval, we'll refinance it and we'll tuck it up. It's not always going to happen.
No. And in the meantime, you've paid 8 or 9% on that money.
Yeah. So speak to your mortgage broker. And again, if you are out there and you haven't had your mortgage reviewed and you don't have an active relationship with a mortgage broker, you can go to sortyourmoneyout.com, click get help. And John and I have a panel of brokers all around Australia that can help you. We'll leave it there. Happy summer, guys. Hope you're enjoying the break. We'll see you guys soon. See you, John.
See you, bye.